And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon and welcome to the Market Recap. Ash Wednesday, March the 2nd. I'm John Hoagland. Thanks for trusting me with your time. Our good friend Dan says to say hello to everybody. He misses you all. Interesting trading day. Just wanted to touch base on some of the testimony that Chairman Powell was talking about today, and in front of, where was he again today? He was in the House Financial Services Committee. A couple of things he mentioned. He thinks it's still going to be appropriate to raise rates, by 25 basis points in March, the FOMC meeting exactly 2 weeks from today. He says the Fed and Congress both contributed to our inflation. He is looking for inflation to slow near the end of the year. He says they need to be nimble in the light of the Ukrainian war, and needs to be. He says there needs to be congressional action on cryptocurrency. Now, I haven't looked very deep into that, but something I've been expecting for 5 years is eventually the government's going to come in and start messing around with your cryptocurrencies. As far as the markets are concerned today, crude oil finally, today we reached that swing high from back. We'll take a look at that on the charts anyways. Apparently, the United States Strategic Petroleum Reserve is at its lowest inventory since 2002 right now. EIA inventories also, when they were looking for a 2.7 million barrel boost, came out with a 2.5 million barrel draw. Seems our worries about crude supply are well founded. As far as the market today, crude oil did hit that swing high. August, I think it was, of 2013, 112.24. We reached that today. There's more swing highs up above. Don't think this is over. As far as the E-mini S&Ps and the NASDAQ, the ES, very strong delta divergence today that can kind of put price up at the upper extreme of the balance area that we've been in for 3 to 4 days here. It's going to be interesting to see if we added a whole bunch of open interest. Looking at the news here, CNBC is talking about the Wall Street rally gains steam. Dow up 600 points as traders try and shake off Ukraine-Russia conflict. The NASDAQ just followed suit. Didn't have that same delta divergence, but did kind of followed the S&Ps up all day. Gold price spans the weekly kickoff level of 1926. It happens sometimes. It gets a little bit choppy when that happens. But basically stayed inside yesterday's regular trading hour range. The euro ranges and finds resistance at weekly kickoff low. It broke out below there yesterday. Tested back near it today. Mostly range-bound day, though. The 10-year talks of rising rates certainly has created a turnaround in price in the 10 years as well as the rest of the treasuries. The nat gas picks up volume on a breakout above weekly kickoff high. That breakout actually occurred after the close on low volume. So we're going to have to see how that plays out for us as well tomorrow. Make sure, as usual, hit that lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Recap. You can subscribe to our YouTube channel, get notifications when we do go live. Going to say good afternoon to Spencer. Went for a walk, had a couple of beers, made it back in time for the recap. Good work-life balance. I, however, will probably wait a little while before I have a couple of beers. Jeff, good afternoon. Scott saw and he conquered, agreeing that work-life balance is a good thing. Tachyon Amplifier, good afternoon. Brett, S. Jewel, howdy. Dan Emmons, nice to see you. 25, versus an expected 50 basis points. I had to trim that back a little bit, I'd have to say. Norman, good afternoon. Vince, good afternoon, my friend. Thanks to the Top Step team for responding to the technical problems with Trade-Evade data fees today. Good reminder to keep catastrophic stops in place in case of technical difficulties or otherwise. Always wear a stop. Yes, we got word that there was a problem. We got it pretty much taken care of really, I think, pretty quickly. It was happening during the group coaching session, which, by the way, thanks to all of you for joining me for that. Hopefully you found it helpful. Hogue, I see ES Delta dropping versus the rise in price and an inability to break 4,400, possible absorption or institutions selling the rip. Well, technically, when we see a delta divergence, like, delta decreasing in value or increasing in negativity is some, I would say, against price, it's usually an indication of longer time frame, in this case buyers. We're going to see that on the charts. That's why I'm going to be very interested to see if we had a bunch of open interest increase in the S&Ps today. Now, it's March 2nd. 2 weeks from tomorrow is switch day, so we are coming into rollover in the equities. We're in rollover in the currencies. Those are going to roll probably next Tuesday into Wednesday as far as that volume is concerned. So we're coming into some rollovers. One of the things about the S&Ps that we typically see when there is a divergence like this, we are going to end up seeing short time frame traders getting too short throughout the day as longer time frame buyers continue to place those bids, and we'll usually see a blow off at the top. Sometimes that'll create a late spike. Those late spikes that I like to take advantage of in the following day. We did not do that today. I don't know if it's that Elvis left the building, that the buyers finished what they were doing for the day, and that wasn't enough to get the short time frame traders too short. But again, we're going to see that in the charts, and it's a really interesting and a good question. Mike Russell, my pleasure. Took out the March 1st overnight high and then sold off. Yeah, just barely took out that high, didn't it? Sold off the 20 handles. That was really kind of the extreme of the area of balance that we've been looking at on the daily chart. So, that opportunity up there was a pretty cheap opportunity for us to perhaps look for a short. If we didn't do it, well, that's all right. There's always more opportunities and always more to learn. Tomorrow, make Hogue money. Right after the forecast tomorrow, I'm going to open up a Zoom meeting. We're going to watch the S&P open. We're going to have maybe 5, maybe 10 traders allowed to speak. We're going to discuss what we're thinking in the S&Ps tomorrow, and we're going to spend about a half an hour discussing the possibility of taking a trade or trades. This is going to be fun because this is all going to be on you. It's up to you to make Hogue money tomorrow morning in the S&Ps. We're going to see how this goes. Of course, we are looking for we're looking for feedback to see how you like it, if the timing is good, if the timing is bad, if we should use another product perhaps, change products, something we're trying out tomorrow for the first time. So I'm looking forward to it. I think it's going to be a lot of fun and hopefully informative. We certainly have some things to look at in these markets. Yes, Vince. Excellent. Make Hogue money is what time tomorrow? Right at the end of the market forecast. I'm going to try and get the room open by 8:25 Central Time. So we have 5 minutes to prepare for the open in the S&Ps and discuss anything we may want to do right on that open. All right, so looking forward to it. It's going to be fun. It's going to be a little strange. New things usually are, but I like that. And we're gonna try that tomorrow. We're gonna do it the next 2 Thursdays after tomorrow as well. Maybe this is something we're gonna do more often. Maybe again, it all depends on how you like it. What if you like it, if you don't like it, let us know. That's you have suggestions for improving it. That's what we've created this whole program on, is your suggestions. All right. So yeah, again, that's try and be done with the forecast by 8:20 and get that Zoom room open just right immediately after that, so we can get some folks there. I can allow some people to trade. We're going to kind of go random on those. We'll probably start with some of the more vocal people from the forecast and let them discuss the trades, and we're all going to be able to vote on them. We're going to use the chat room, and if you like the trade, you're going to put a Y. If you don't like the trade, you're going to put an N. We're going to see what we think, and we're going to put those trades on. Now, I want to do these in a live market tomorrow because it's the first time. We're going to do it in sim. We're going to see how it goes, but if this goes well, even if we don't make a lot of money, I think it would be really good to do it in a live market. So we'll work on that, and let's work on these charts. Got the 30-minute. Got the 30-minute up here for the S&Ps. So this is what we're talking about when there's a delta divergence. Now, for those that aren't familiar with delta in futures, it's the total number of contracts that are traded on the offer minus the total number of contracts that are traded on the bid. Positive delta, it's a market order buy. Negative delta, it's a market order sell. When we see delta, wow, boy, did it just really tumble at the end of here. When we see delta, this is where it starts from 0 at 8:30, and you can see right down here, it's negative 32,000. That's 32,000 more contracts traded on the bid than on the offer. It would indicate that our more aggressive traders are actually hitting bids with market orders. That would mean that our more aggressive traders should, we would think, be able to move price lower, but the opposite is occurring. So what does that tell us? It tells us that there's a snake in the woodpile here, and there are traders placing bids and replenishing bids and moving bids up and squeezing the short time frame shorts and squeezing the short time frame shorts and moving those bids up and moving those bids up. Typically, when that happens, when we see a delta divergence like this, we may see a blow off at the top of the trading day because of the short time frame traders hitting those bids, getting too short by the end of the session, and then wanting to go home flat. We didn't see that today. Are we going to see an increase in open interest from today? because this delta divergence could be indicating an accumulation in some time frame, probably a longer time frame, because they kept the pressure on the shorts all day long. They finished their business apparently, and they let the market come back down a little bit. But I'll be watching again tomorrow morning to see if we have a substantial increase in open interest. Now, here's what we're looking at. Okay, 1, 2, 3 days in range and in basically in a trading range, right? We have Monday, Tuesday, Wednesday. We're basically all inside Friday's range. Yesterday, the overnight, night before last, we put in that high that we just tested to this afternoon, and we came off 20 ticks or 20 handles, like Vince said. So if we are trading range-bound markets, we want to fade the extremes, and we got finally an opportunity to fade the extreme from the overnight night before last, which is really the highest point or the extreme of this area of balance. Okay, here's, I would say, the lower extreme of our area of balance. We have not yet tested back to the low from Sunday night into Monday. So again, tomorrow when I get up at 5:30 in the morning, I will be at my computer and I will be first thing checking open interest. If we had a whole bunch of open interest come in, that may indicate that the market is ready to break out. Did we bring in tremendous volume? No, we did not. We did not bring in any huge volume on this up move here in futures. Now, we'd have to take a look and see what we think of the New York Stock Exchange. But as for an accumulation, an assumed accumulation of perhaps new longs here, we did not bring in new volume. If we break out the high of this area of balance, we take out weekly kickoff high, which is 44.11, and we start to see a bunch more volume coming in. That's going to indicate a potential break in market state. We've got a medium time frame market state that's leading us with lower highs and lower lows. We start putting in higher lows. We start putting in higher highs now. That may indicate that the market state has changed. There's still so many uncertainties out there, and we don't know what's going to happen with half of this stuff. But you can't discount the resilience of these markets. We talked yesterday on the recap about, how are the markets doing with all of this uncertainty? And I said yesterday, I think that the markets are actually holding up very well. Here's the NASDAQ, 1, 2, 3, all straight across, not necessarily a strong high. Okay, 1, 2, 3. The market keeps testing to that level. 30-minute chart. We did not have the same delta divergence that we had in the S&Ps. So here's that high. Here's that high. Here, high. We're very, very even on the highs here. Exactness does not indicate strength in resistance in this case. Again, I'll be watching the NASDAQ to see if we had a big increase in open interest, and we got to use that now because in another week, volume and open interest is going to get real blurry as we come into rollover. Here's crude oil. So I think it was August 2013, the swing high 112.24. We traded all the way up to 112.51. Next swing high, April 2011, 114.18. The next swing high above that is July of 2008. It's $148.60. We were looking for a boost in crude stocks, according to the EIA. The opposite came out. They were looking for a 2.7 boost a 2.5 draw. So we're seeing, less demand or less supply, increasing demand, price goes higher. 30-minute. So we open with a gap. We close the gap. 9:30, the EIA comes out. Everything turns and heads the other direction. Seems finally we got a reaction to the EIA, which was actually the way that you would think the market would react. You have to see what it looks like again tomorrow. Here's gold. Gold was a kind of a sticky wicket here this afternoon. Yesterday we had a breakout above weekly kickoff. We added 13,000 in open interest. The market tested back to weekly kickoff and basically spanned it in the regular trading hour session. It didn't really provide much opportunity in either way. It does happen from time to time. The market became a little bit more magnetic to it than repellent of it. There's still some decision making going on as to whether we're going to see this market continue to the upside. A lot of that's going to have to do with fear in the equities, or if we're going to turn back and head back down below that level and potentially eventually break market state, which is medium time frame market state to the upside, remains intact. It may be at risk. Uh, 6E, the euro, breakout below that weekly kickoff level yesterday. That was 111.55. Volume wasn't all that great. We did add 12,000 in open interest, but remember, we are now in rollover in the currencies. So that's going to be a little bit blurry. It may have more to do with getting a cheap rollover than being directional. Here's the 30. Open, rejecting value, coming back in, reaccepting value all the way to the high of value, almost to the tick from yesterday, and then finding rotation and comfort back inside value from yesterday. Value did continue to move lower. We did get an attempt at an opportunity at weekly kickoff high. Didn't quite get there. And boy, look at this 10-year. Okay, here we go. Oh, no, we don't. The discussion of raising rates knocked our treasuries for a loop. For a loop. Here's the 30, how it played out today. Okay, here's our move up. Opening below value. No effort to try and get back into value. This market traded right back down almost to the tick to weekly kickoff. Still supportive there. If we can hold there, we may see this market return back higher. Acceptance below changes the market state back to, guess what? Range bound. Natural gas, the daily. I'm going to do this right today. Put up the wrong chart. This morning, volume maintains. Volume actually increases on a potential breakout above weekly kickoff high, but it wasn't really a breakout. Did it occur in regular trading hours? The volume actually was below weekly kickoff. Take a look at this. Okay, here's the point of control. Volume is below weekly kickoff. Opened above it, fell below it, found resistance, and then after the close, after the 130 close, the market starts to head higher. Volume wasn't all that bad, actually, on this move to the upside here. Ended up with negative delta, kind of contrary to the move here. Did we find some buyers here? We have to see if we increase open interest. All right. Got a couple of questions here. Hang on one second. You guys, I lost you. I apologize. You guys, I don't think could hear me for a minute there. Yeah, Dan, I want to go back and buy crude for negative $37. Just remember, if they ever tell you that it can't go to zero, it can. Ocean Blue, thank you very much. I'm glad that you find the information useful. That's really my goal here is to provide information, educate a little bit, and bring some context to the markets. Open interest in volume, Aaron. Volume. Yeah, I screwed that up. I'm starting over again. We got the volume now. Volume is the total number of contracts that are traded in a given trading day, for 5 o'clock tonight through 4 o'clock tomorrow. That's going to be a total number of contracts traded. Doesn't matter if they're entries or exits. It's the total number of volume. Open interest is the total number of contracts outstanding. So, Aaron, if I buy one from you and it's a new position for me and it's a new position for you, we have created that contract. That is one in open interest. Now, if I sell it back to you and we liquidate that position for both of us, that removes one from open interest. So open interest is different than volume because it's the total number of outstanding contracts. Volume is the total number of contracts that are traded in a specific period of time. Does it make sense? Aaron, if you have not been to group coaching, come to group coaching on Monday. I can get a lot deeper into open interest during that period of time. Used in conjunction with each other, we can make an assessment on the health of an auction. If price is moving higher over time, and volume, is increasing as the auction continues in that direction, and open interest is increasing, that means that there's money still coming into the market in that direction. That's a very healthy auction. It's likely to continue. But as price continues to leak higher, but volume starts to go to cut off, and open interest starts to drop, that's a warning sign that that market is that auction to the upside is tiring, and a change is likely. So we can keep track of that information and use it to our advantage. Now, there are certain things that make it a little bit more difficult to read, like rollover. We're coming into rollover in the equities. We're in rollover in the currencies. You're going to see the front month, the March contract in both of them. It's going to look like the volume is totally dying and open interest is running out as we transfer the risk from the March contract to the June contract. So there's things you got to be paying attention to. For 2.5 months every quarter, we don't have to worry about rollover in the equities. If you're trading crude oil, you have to worry about rollover every month. Okay, so sign up for group coaching. I'll put the link in right now so you can sign up for it for Monday. And you'll see my email there. Send an email about questions about volume and open interest. I'll be happy to be a lot more clear and concise on the answers because, well, we'll just have more time. Okay? All right. So tomorrow is Thursday. Jobless claims, productivity and costs, PMI final, monetary policy testimony, the second day of it, factory orders, ISM services index, nat gas report, some bill announcements, some bill auctions, and a couple of talking feds later on in the evening. And then Friday, we know we have unenjoyment. That's what we used to call it in the trading pit, unenjoyment. We knew it was going to be a very busy, long day. Unemployment numbers due out on Friday, so we're still waiting for a lot of information. Keep praying for peace, strength, and freedom for those in the entire world, and probably most particularly in Ukraine. Get a good night's sleep. I'll see you tomorrow morning for the market forecast, 7:45. Don't forget about making Hogue money at about 8:25. We're going to open up that room. We're going to have some fun, and we're going to see how we can do and see if we can make some money. I'm looking forward to it. I'm hoping you are too. Be good to yourself. Be good to each other. Say a prayer, and we'll see you tomorrow morning. Same bat channel, same bad time, 7:45. Looking forward to it. Have a good night.